What's going on is that, we came into the year once again with very high expectations. And what's been interesting, if you look at the data and the extent to which it's been disappointing, what they call economic surprise indices, they're actually at the worst level since 2009. And it's not because the economy is rolling over and we're not, I think, in any real danger of a recession. But people had a very clear thesis this was going to be the year the U.S. broke out at 3.5% growth. And some of the longer term factors, whether it's slow wage growth or now the strength of the dollar, are weighing on the economy in a way that's just disappointing relative to expectations.
So do we ever shake this off? And what do you think about the markets with the S&P closing at a new high on Friday again and the Dow within 16 points of a new high? Are the markets overvalued here or not?
The markets are expensive. And you think about a couple of weeks ago that April non-farm payroll report. That gave the market exactly what it wanted. It was about 225,000. It was strong enough to remove any concerns about are we going back to stall speed, but it was weak enough that the Fed can take their time. And that's exactly what the market wanted to see. And that's why you rallied hard on the day. I think the danger is you're starting to get to a point where the data's soft enough, earnings are likely to also be weak, that it becomes difficult to sustain these valuations when eventually the Fed is going to remove accommodation.
Eventually, maybe further and further in the future, though. At this point, the Fed funds futures are thinking it's less likely that they even go by September.
It is getting pushed back. And I think last week was a week where, as you said, industrial production, spending, everything was pointing the wrong way. We do think you'll get some stabilization as you get into April and May. Consumption will probably pick up a bit. But going back to your other question, are we going to go back to 3.5% growth? Probably not, because you've got an environment where so far productivity has not rebounded. Maybe the more important point, which no one talks about, is a very different demographic. You've got much slower growth in the workforce. So the ability to get to 3.5% and stay there, that's a much more challenging thing to do than it was 30 years ago when the workforce was growing much faster than it does today.